if you have a product that you envisioned as being the key solution, but your customers aren't adopting it like they should, pivot around, explore, test, see what works, and do that over and over again until you have really reached a product that fits with the problem set.
Lexi,
Thanks for having me.
why do you do what you do?
Well, besides trying to allow all of our investors to walk away with multiples on their invested capital, I certainly believe that entrepreneurship can be the key driver for impact across the world, and there's no other place that makes even more impact than on the African continent. So rather than just investing charity or through foundations to drive some of this, I actually think entrepreneurship is the best way to catalyze a lot of that growth and really multiply your investment dollars going in to make sure that the impact outcomes on the other side are massive.
And why entrepreneurship? Why does it, in your opinion, have this massive impact?
So I don't think that there's any other incentive that's more catalytic than actually making money. And I think you can say that from catalyzing investor capital to entrepreneurs trying to build big companies that meet the problem set that actually demands higher margins. It's a really big problem set to make sure that you come out the other side with making capital. But I also think that by building some of these very successful businesses, you're also building talent resources that then, grow up to build their own businesses. And I think that continues on for generations and generations. And I think you also can build out very specific tech hubs where that catalyzing even has more stronger multiplier effect. If you're building a tech ecosystem where infrastructure is put in place, where a lot of the talent is being built from the seed stages, some of these successful entrepreneurs then go on to seed other companies. I think it feeds across each other, and I think in the next 10 years, we'll really see that come to fruition in Africa.
That's really the Norrsken philosophy, from my knowledge. The board members being essentially these unicorn founders and now giving back into the community. Why is Norrsken unique to any other VC?
Yeah, so our platform, Norrsken22, is especially unique because of a couple of reasons. One is the strong ecosystem from the Norrsken Foundation. So the Norrsken Foundation has backed several venture firms across the world. One of those is an early stage Africa-focused firm. One is a global impact VC firm. One is an accelerator, which many African companies also go through. And it's this ecosystem that I think builds brand reputation, but also a lot of symbiotic relationships across the board, and probably allows us to leverage off of the learnings of other platforms and that wider network that the Norrsken brand brings. But we're also unique because our initial investor base was over 30 founders of billion-dollar plus tech companies across the world. And these tech founders had, built successful businesses, faced a lot of the problems in scaling that a lot of the entrepreneurs that we're going to back will have faced. And they wanted to bring their knowledge, but also their network to help our returns, help our investee companies really scale into unicorns themselves, and not only realize the commercial impact from that in their own investments, but some of them were also impact driven and saying, look, this is how we can catalyze a lot of change. But most interesting, I think, was that a lot of them actually see Africa as another market that they want to expand their businesses into. So for them, it's an opportunity to learn what's happening on the ground, see some of these companies that we're investing in, and hopefully do some acquisitions themselves. So it's also an exit path for us.
And for you personally, why Africa?
Yeah, it is quite interesting. I don't know if it was Africa specific for me, although I originally made the decision because I had spent quite a bit of time backpacking around the African continent. I had kind of deeply embedded myself in, spending $10 a day traveling across from Eastern to Southern to Western Africa. But for me, I thought that Nigeria specifically, which is where I live now, was one of the biggest markets in the world that nobody was paying attention to, especially American investors. You will have heard the statistics on the very young, fast-growing population, but it's also a market where there are massive amounts of problems to be fixed and some incredible talent to be able to unlock that. So that's what got me excited about moving to Nigeria specifically, was that I could really make a name, I could make a brand, and hopefully bring a lot of this international capital into the market. But I needed to be on the ground to really understand it.
And that capital, is it just through ex-founders of these unicorn companies, or do you source it from also other areas, other places?
Yeah, so the initial investment was largely from these unicorn founders, but since then we've attracted capital from some of the largest institutional investors across the world, even as one of their first African investments. Those, yeah, so I'll get back to that. But some of those investors include SEB in Sweden, Standard Bank here in South Africa, a lot of the development finance institutions, so BAI, IFC, DFC, Norfund, and we were, for a lot of those guys, some of their first venture investments as well. And I think what all of these investors kind of recognized is we were putting a strong commercial story on the table and being able to show from our track record. There were two teams coming together. There was my team that we'd built in Nigeria and West Africa under Acuity Venture Partners, and then there were partners that had left Actis. So we were bringing these two teams together, but we both had very strong track records at both of our firms, and we're able to show, like, this isn't just a story or a hypothesis. It's something we've actually been able to unlock already with our investments and return multiples of capital back to our investor base. And I think what was also different about our platform that resonated with a lot of these investors is we were on the ground in these key markets where the tech hubs were really being built. So I'm in Lagos. We had a partner and a team in Nairobi and a partner and a team here in South Africa, both in Joburg and Cape Town. Not yet in Egypt, but hopefully that will be in the future. And having those key decision makers embedded in those local markets on the ground was something that helps certainly for deal flow, but more than that, it helps for value creation. I can pick up the phone, call up the ICT minister, or get a hold of somebody in the Central Bank of Nigeria, really help facilitate a lot of these relationships that our companies are constantly struggling with as they scale across the entire region. And as one company from Nigeria reaches scale and they want to expand to South Africa or Kenya, we have a partner and a team based there that can help facilitate that as well. So I think all of this kind of resonated very much with our LP base. And I'm not going to discount it. Timing was also good. And I think you've seen a lot of market correction now, and we were able to get things done just in time before that happened.
You spoke about that support that you are able to provide for your portfolio companies. What other support do you provide? And my follow-up question to that would be, what do you think is lacking in terms of support from these portfolio companies, not just in Norrsken, but other VC portfolio companies?
Yeah. So I think that there's been a lot of talk recently about governance across the ecosystem, which is very important for us as growth stage investors. But I think across the board for growth stage investors, we've been thinking about this for a very long time, because our exit is also quite dependent on the processes that they've built internally. And a lot of that comes down to governance and compliance. But I'm really happy to see a lot of earlier stage investors also putting this together around their value creation plans. Something I think that's hugely important for us is not only helping with this market expansion and scale, but also really helping these companies plan for their exit path. And that can come down to everything from product roadmap, building around the products where there is a clear exit path, and in sometimes also making that product roadmap very narrow, because that's what an acquirer will buy. It also, there's a lot of support around planning for the exit path in terms of getting some of those partners on board, either as co-investors or potential customers, or just having ongoing relationships with them. I mean, with one of our companies, AutoCheck, for example, we've had an ongoing dialogue with a major company in similar business model, another market, that is quite interested in expanding through acquisition, and hopefully someday that'll be AutoCheck. So also just understanding what some of those companies need as they look for an acquisition partner. In some cases, we can also help on talent, and I think that's certainly something we've put in a lot of systems and work around. I think that's also something a lot of other VC investors certainly do. But most importantly, we want to be that first call for a lot of those international investors as they look into the African market. So, constantly speaking with the Sequoias, the A16Zs of the world on how they're thinking about emerging markets in general and trends that they see, and really trying to be that trusted source as they're looking at deals on the African continent. And, although we invest all the way to Series C, as some of these companies need some of that later stage capital, having somebody on board that has a lot of those global expertise and connections, I think is hugely important.
Okay. And founders specifically, in terms of their support, is that also something that Norrsken would provide? Let's go into like mental health. Health
so on mental health, look, we are absolutely, on one side we are kind of a sounding block and can be an ally, but also can challenge a founder's views on the world. We're not, we certainly don't want to be, look, I think entrepreneur friendly is something we want to be seen as, but at the same time, we want to give hard love, and I think push a lot on strategy and views of a founder, and always kind of be that sounding board that's trusted, but also not just a blank slate and saying, look, you can just lean on us in all circumstances, and we'll be kind of like, yes man, thumbs up on everything that they want to do. So I think we see ourselves as being the guiding force on strategy with a lot of critique and hard love. We don't always expect founders to listen to us, and I think that they should push back. On mental health, look, being an entrepreneur is the hardest job you can possibly have. I mean, you see a lot of success stories come out on one end, but there's also certainly a lot of hard times. Some of those are very public, and even when you're, there's days where you're not sure if the business is going to pull through on the other side. We want to kind of be that ally in times like that as well. We don't have, a lot of internal resources institutionalized to help support with mental health, at least not at this time. But we do want to be that ally as founders are dealing with hard times, that they can come to us and talk through them. Absolutely.
Okay. In terms of bad apples, and I've asked this to other VCs.
Oh, no.
But there are bad apples in the bunch. Have you personally experienced with any deals that did not quite work out as according to plan? And maybe if you could provide me with what went wrong in those scenarios.
Yeah, so I've personally had some good failures and some bad failures in my portfolio, and I admire more than anything founders that have failed gracefully from their businesses, and set things up where they've been transparent, where they've communicated to their employees, where they've tried to also give their employees kind of a soft landing on the other side, and also made good on their commercial commitments as well. But we've also been involved in scenarios where, a founder has misreported numbers to the point of probably running a business completely to the ground, but telling investors that the situation is completely different. And that's hard because you do really feel blindsided, especially if you've been along that journey with those founders from the very early days, which we had. And, you've seen this business being built from the ground up, seen it being kind of a successful venture for quite some time. But then something clearly flipped internally, where maybe they were moving money in between accounts. They kind of got in a hole. They couldn't keep up. And then at some point, they just decided that they had already gone too far down this path of misleading investors and continued further down it. And it's really hard because you go back to founder mental health. I think it's, as an investor, you want to give your founders the benefit of the doubt. I mean, this is a really, really hard business, and you trust that they're doing everything for all stakeholders, not just you as investors, but their staff, the ecosystem at large. And
what is it? Do you think that it's the pressure, or do you think that they just can't face the investors because of the expectations, because of let's not even get into the legal side of things, but from an emotional side of things, do you think that it's more not being able to, it's easier to provide wrong numbers?
Yeah, or... I think at one point, and this goes back to governance, I think that probably with a lot of these founders, they do something quite small that they think that they can recover from the following month, and then it gets to be, it's like a gambling debt. You think, well, I'll just go back and win back my money the following month and it'll all be fine. But they get further down the hole. And at that point, there's so much shame and guilt that it's very hard to go forward to investors with the story of what really happened and show that, all of this had been.
And in that case, does it go the legal route? For example, maybe fraud cases. I mean, there's lots of stories of American businesses that were funded that.
Absolutely, but in a lot of times you can't still recover the capital, right? So, yes, I think some of these founders are absolutely being prosecuted, and because a lot of these companies are structured in the U.S., I mean, they're facing charges in the U.S. rather than in their local markets, which is important. But I think at the end of the day, the damage is done for the ecosystem, and certainly investors walk away without being able to recover the funds in many cases.
On a more positive note, could you share with me a success story that you're really proud of?
Yeah, I'll speak to two sides. One from my long history investing. I mean, I think we're very proud to have backed a couple of companies that were key players in especially payments infrastructure quite early. So Paystack and Flutterwave from the Nigerian tech ecosystem. And both took very different strategies. One was very narrowly focused on one product, wanted to do that best in class, but also wasn't looking for geographic expansion. The other wanted to be a very broad infrastructure player where any party, whether they're doing business from the US into Africa or another African business that wanted to expand across borders, could just plug into. And that's still certainly a work in progress, but I think those two companies really laid the groundwork for a lot of the tech companies that have come after them, and also attracting a lot of investor capital, because we saw some incredible exits out of those two companies. Now, with our current portfolio, we are look, you can't choose one company, but maybe I'll go back to our first investment out of the fund, which has done extremely well, and that's a company called Sabi. So Sabi is really the operating platform for manufacturers and wholesalers. So they're essentially several different marketplaces put together. On one end, they might do what a Trade Depot or Wasoko does, which is enable these wholesalers and distributors to off-sell to informal retailers. But they also allow them to export and trace their products as they move across borders. They allow them to have pricing transparency. They help them run their businesses much more efficiently. They couple them with logistics partners to solve that part of the friction problem in Nigeria, and provide embedded finance across that value chain, which is hugely important. And that company has done an incredible job of really listening to the customer and pivoting their business model around where the problem set really lies. And by the way, that's also the higher margin route for their product. And we're quite proud of how that one has performed.
Amazing. Final questions is, along your journey, what have you noticed in terms of mistakes that entrepreneurs make in their business? You've spoken to so many so far, but maybe three that's really stand out.
Yeah. So So one that certainly comes to mind is being headstrong and resilient at all costs. And I don't want to say give up on your business. That's not what I'm saying. I'm saying if you have a product that you envisioned as being the key solution, but your customers aren't adopting it like they should, pivot around, explore, test, see what works, and do that over and over again until you have really reached a product that fits with the problem set. I see a lot of founders, I think, especially that love building on the product side, get really obsessed with the beauty of their product, but it doesn't necessarily match the needs of the customer or what the customer will pay for. Sure, a lot of customers could say, yeah, we love this, it's beautiful, but at the end of the day, will they actually pay for it? Another key one for me, and I think that this will be a little contrarian from what you'll hear from a lot of investors, is I think you can actually build a one country solution, and that can build a big enough business. I lean against companies that are trying to expand across borders too quickly. And I think they hear that they should a lot of the time from especially their investors because of currency fluctuations, that they see a lot of the competitors being these Pan-African plays, but I don't think that's right for every business. And I think network effects can really be unlocked only within smaller ecosystems. And if you should, for capital efficiency, get that extremely right to begin with.
So market research, start small, make sure you own the market.
Absolutely.
Give me one more.
Okay, one more. Okay, another one that I don't know if this is one of my top 3, but it's certainly one that comes to mind. I see a lot of companies, especially at this Series A, when they've raised a bit of money, going out to market and trying to hire the best-in-class talent, the best compliance guy that they can get from Germany. But at these points in time, when the company is still really scaling, you don't need a specialist. You need a jack of all trades. And so sometimes hiring those really expensive core talent hires is not something that's going to help you in the short term. It's something maybe you need to push off for your longer term and rather get somebody that can plug into many different functions and be very entrepreneurial themselves.
Even at that Series A level.
Absolutely, yeah.
Wow.
I think people believe that it brings a lot of credibility if they can hire somebody in from, the Accentures of the world or whatever it be. But that's actually not a great use of your resources. Okay, I'll add one more, just since we're kind of in this funding winter, as we say. Don't ever wait until you have less than 18 months of capital to try to raise your next round. And absolutely, in this environment, capital is king, and don't be afraid to even take a down round to get the money in the door, because that could mean the difference in you dominating the market.
What's the minimum amount of time they should be waiting?
So we really are pushing our portfolio companies to have 20 to 24 months of runway period.
Wow.
Internally. And look, that might change if we start seeing a lot of capital flow in. But at this point in time, what doesn't kill you will kill your competitors, and you need to be there to survive a long winter if this is what happens. And we think Africa lags the rest of the markets, and we still haven't seen a lot of momentum pick up in other markets yet.
Last question. What are VCs not doing that they should be doing more of in Africa?
This is more, I think, personal, but I would really like to plug into companies myself and do their most basic operational functions. Sit on a call center, hear what their customers are complaining about. I think that would be something that would open up my eyes to probably how customers view a lot of these platforms, and kind of the operational challenges that they face on a day-to-day basis.
That's a good one.
Yeah. Cool.
Thanks, Lexi.
Yeah,
this was very
fun.
informative and valuable. And also thank you for the impact that you're making in Nigeria, deciding to stay here in Africa. And I hope to see Norrsken in portfolio companies in many countries and making a big impact. So yeah, thank you for your time.
Yeah, thank you so much.
Cool.